A seismic shift is rattling the North American car industry. Major Japanese automakers are packing up, not to go home, but to head north, to Canada. For decades, American towns thrived around Japanese car factories, but now, that relationship is in crisis. The news has sparked disbelief and anger across the U.S., from factory floors in Kentucky to boardrooms in Detroit. The companies that once invested billions in the U.S. are now seeking friendlier ground. This isn't a minor adjustment, it's a full-scale retreat, triggered by controversial U.S. trade policies. These policies, meant to protect American interests, have backfired, creating unintended consequences. As Japanese giants like Toyota and Honda rethink their North American presence, American workers face uncertainty and car prices are rising. Meanwhile, Canada is rolling out the welcome mat, offering stability and new opportunities. As U.S. states brace for factory closures, Canadian provinces celebrate new investments and jobs. This is the story of how one nation's protectionism became another's golden opportunity. The catalyst was a new U.S.-Japan trade agreement signed in July 2025. It lowered tariffs on cars imported directly from Japan, from 27.5% to 15%, making Japanese-made cars cheaper for Americans. But the deal ignored cars built in Canada and Mexico for the U.S. market, which still faced a 25% tariff. This meant a car built in Japan was now taxed less than the same model built in North America. The American Automotive Policy Council called the policy illogical, as many parts in Canadian and Mexican cars are made in the U.S. Instead of protecting American industry, the policy penalized it, hurting the integrated North American supply chain. Japanese automakers who had invested billions in North American production suddenly faced a dilemma. It became more expensive to build a car in Canada and sell it in the U.S. than to ship it from Japan. The deal, intended as a solution, created a bigger problem. Japanese companies were forced to rethink their entire North American strategy. The stage was set for a dramatic shift. America's tariff policies hit Japanese automakers hard and fast. Companies like Toyota, Honda, and Nissan tried to absorb the extra costs, but by 2025, the losses were unsustainable. Toyota's North American division reported a $438 million net loss in early 2026, a stunning reversal. Globally, Toyota was profitable, but North America had become its only unprofitable market. Unable to keep shielding customers, Japanese brands raised prices on popular models. This made their cars less competitive against American brands, putting them in a no-win situation. Absorb the tariffs and lose money, or raise prices and lose customers. The American market, once a profit center, had become hostile. Something had to change, and fast. Facing losses and trade chaos, Japanese automakers found their escape, Canada. They began shifting production north, winding down U.S. investments and pouring billions into Canadian plants. This wasn't just a few new assembly lines, it was a total realignment of their North American strategy. Announcements of Canadian expansions came in waves from 2023 to 2025. Canada became a safe harbor, offering stability that the U.S. no longer could. The U.S. had been home to massive Japanese manufacturing for decades. Toyota, alone, built nearly 2 million vehicles in the U.S. in 1 year. Billions spent on research and development, deep roots, now being pulled up and replanted in Canada. The move was a calculated response to a hostile environment. By relocating to Canada, automakers could still access the U.S. market through the USMCA trade pact. Canada became the logical base for serving North America. The U.S. had pushed its partners away, and Canada welcomed them. The Great Migration was underway. The automotive map was being redrawn. The driving force behind this shift: stability. U.S. trade policies created chaos. Tariffs could change overnight, making long-term planning impossible. Canada, by contrast, offered a predictable environment under the USMCA. Japanese automakers saw Canada as a way to insulate themselves from U.S. tariff shocks. Building cars in Ontario and shipping to the U.S. became a safer bet than manufacturing in America itself. Beyond trade, Canada offered a skilled workforce, especially in Ontario, a historic car manufacturing hub. Canadian universities supplied well-trained engineers and technicians. The Canadian government actively courted investment, offering incentives and support for R&D, especially in electric vehicles. The combination of stable policy, skilled labor, and government support made Canada irresistible. The decision wasn't emotional, it was pragmatic. The US signaled risk, Canada signaled partnership. For Japanese automakers, the choice was clear. Stability won out over uncertainty. The exodus of Japanese manufacturing is hitting the U.S. economy hard. The most immediate impact: American jobs are at risk, not just in factories, but across entire communities. Labor unions are frustrated. The promise to protect jobs has backfired. For car buyers, prices for popular Japanese models are rising, making new cars less affordable. The new trade deal has created bizarre distortions. A car imported from Japan might be cheaper than one built in North America. Ironically, U.S. automakers are also suffering. Companies like Ford and GM operate integrated networks across North America, now at a disadvantage. Ford alone estimated tariffs would cost it over $2 billion in 2025. The entire U.S. auto industry is in a precarious position, with both foreign and domestic brands calling for fairer policies. Instead of protection, current policies have created chaos and higher costs for everyone. The U.S. has managed to harm its workers, consumers, and its own car companies. The fallout is just beginning. As the U.S. deals with the fallout, Canada is the clear winner. Japanese investment is revitalizing the Canadian auto sector, funding new factories, and creating thousands of jobs. The benefits ripple out. Parts suppliers, logistics, and local businesses all gain. Ontario, in particular, is set for an economic boom, with increased tax revenues for public services. Canada's reputation as a leader in advanced manufacturing is solidified, especially in electric vehicles. This success is no accident. It's the result of a strategic, stable approach by the Canadian government. While the US built barriers, Canada built bridges. By offering predictability and incentives, Canada became the top destination for automotive investment. The contrast with US uncertainty couldn't be clearer. The great automotive migration of 2025 marks a pivotal moment. US protectionism backfired, while Canada reaped the rewards. For now, all roads in the car industry lead north.